Today we're going to be covering I would say the meat of payroll processing. We talked a little bit about a lot of the administrative stuff surrounding having employees in previous classes. Now we're going to go and look at the specific forms you file and then tax deposits related to it. Again, thanking Goosefoot for having us here. This has been a great series, I think. First of all, also letting you know off the bat, things change. Our website's the authority. That's where you'll find the most up-to-date info. And I'm going to generalize in a lot of cases and just kind of cover in broad strokes, different things. But for this class, just be aware, hey, I might even get it wrong. So refer to irs.gov for the most important stuff. I think we've all introduced ourselves previously, so it's good to be back with you again. And here's Jeffy and his brother. I forget his brother's name, but he says, when I grow up, will you promise to help me with my taxes too? Well, you can do it. I know that the 940 and the 941, if you've never seen them, might seem a little complicated, but it's not calculus. It's simple math. It's only 3 calculations on the 941, and the 940 is done annually and about as simple. So what we're going to cover is the responsibilities employers have for depositing the payroll taxes, how to file the return to report what your payroll taxes are, and the federal tax deposit process. Also, your requirements and penalties. I'd like to talk about the penalties because what might seem like a simple mistake can cost a significant amount of money. And so want you to be aware of it so that you can prep for this and be prepared for it and avoid all penalties. The forms that we're going to be using specifically are 941, 944, and 943. Those are the 941's done quarterly. The 944 and 943 are done annually, once a year. I don't recommend for most people to use a 944. And the reason why is the dollar amounts to qualify for a 944 are still very low. Now, if you are an extremely small business that doesn't expect a lot of growth, it can work for you. But one of the things that I have seen in the past is that a business just, they know in the beginning they qualify when they're starting out to do a 944 annually, but then they grow. And then very quickly, they'll exceed the dollar amount. And the real trouble with that is that once we get a 944 from your company, you actually have to reach out and formally ask the IRS to change me to a quarterly 941 filer. And if the dollar amount increases, we will change it to a 941. I've also seen that. And then the business will say, well, every year I've filed a 944. What's the problem? Well, there's a dollar limit. So I recommend, even if your dollar amount's low enough, it just means extra paperwork. So weigh that in your decision on whether you should do that. A 943 is specifically for agricultural, and that one annually, that one definitely, if you're a farm or some other agricultural industry, I recommend that. So the tax deposits, how often you deposit is based on the total amount of the payroll and the total amount of tax that you're paying. We recommend making it the same time you cut the check. So you do all the paperwork for payroll that week or every 2 weeks or month, however you do it, and you cut the check, and then you make the EFT-PS deposit, the electronic federal tax payment deposit, same day. That's what we recommend. It's not required to do that. And so a lot of businesses will wait until the time it's due. And the problem with that is that the penalties are severe, and especially if it's not automated. So you can make the tax deposit and schedule it before the deadline. So you can go into EFT-PS and schedule it before the deadline. But when I was a revenue officer some of the, you know, businesses I would go visit that had penalties, really it was just a matter of, oh, whoops, I filed it. I swear to God, I filed it. Yeah, but you didn't make the deposit. What do you mean? And they'll look through the bank record. Oh my God, I didn't make the deposit. So out of sight, out of mind, you know, it's just human nature. So when you're doing the project, then follow through with the deposit, schedule it if you want to, but it's easy to miss it if you're just busy running your business. And so the day you sit down for payroll is recommended the day you would do it. But so looking at the deposit due dates. So if your payroll is less than 2,500 for that quarter, so every quarter you're going to file the 941 and 941 for first quarter, January, February, March. You'll file that by April 15th to cover that first quarter. So if your payroll taxes are less than 2,500, you can pay it when you file the 941 by the deadline. If it's more than that, and the last quarter was more than that, then you're either going to be a monthly or a semi-weekly depositor. Again, it's based on the level, and the larger your company, the more payroll you got, the more the requirement will be. Most businesses end up being a monthly depositor. This is a complicated formula, it seems, but really it's pretty straightforward once you understand what we're talking about here. We have something called a look back period. We basically look at the 12 months prior, that is the previous 4 quarters, and then just look to see how much you're depositing or how much your payroll tax was. That's how we determine it. And one of the things that I also see with businesses is, especially if it's a small business where the owner is paid as an employee, they might figure out their profit by the 4th quarter and then make a huge payment to the owner in the last quarter of the year. So a lot of businesses will just have a smaller dollar amount for each quarter that they're paying the owner, just enough to pay bills, that kind of thing. But then a huge payment like $50,000, whatever the annual profit is, paid out as a W-2 employee payroll. So it's subject to payroll tax. That means the employer shoulders more of the burden of self-employment tax rather than paying it out as a K-1, which is a profit payment, right? The problem with that is it can bump you up to the higher bracket and turn you from a monthly depositor into a semi-weekly. So just be aware of that. It's one of the reasons why depositing regularly can keep you out of trouble. So a monthly depositor, though, is most of them. A new employer with no employees can be a monthly depositor. But if your total taxes are less than 50,000, then you'll be a monthly depositor. And so that breaks out to about what, 12,500 a quarter. That means your monthly deposit means you have to deposit for that previous quarter by the 15th of the month after that quarter. So for January, February, March, April 15th. We're just finishing that period, right? If it's not a business day, then make a deposit the next business day. So in other words, if it's Sunday is the 15th, then you could pay it by Monday. There are legal holidays and things like that. And so be aware, legal holidays, same idea, it'll push it out by a day. But depositing and reporting are separate actions. And that was also a common misunderstanding that I found working with small businesses, is a lot of people think, well, I deposited it. Isn't it automatically? No, the deposit. And in fact, there are different platforms as well. You can pay monthly. So again, when we're talking about monthly deposits, it doesn't necessarily mean that you deposit for the entire quarter by the 15th. What it means is that it's the 15th of each month. So for January, let's say you do payroll a couple of times. All the payroll for this month of January needs to be paid by the 15th of February. And the same thing each month. So if you have, it doesn't really matter when how often you pay your employees. You could pay them every week, every 2 weeks, or once a month. But whatever was paid during the month of January needs to be deposited by the 15th of that next month. Whatever was paid in February needs to be deposited here. Whatever payroll was done in March needs to be paid by that April 15th. For more info, publication 15. It's sort of strange. The IRS has kind of changed the name of this. This is actually known as Circular E. I had trouble looking it up online at our website the other day. I put in Pub 15 and it couldn't find it. Put in Circular E, it found it just fine. So I don't know why we're changing the terminology, but publication 15 or Circular E for employer is where you'll find the details of that. Semi-weekly is for the next stage up. And for these folks, it's basically just depositing by the next week. Again, it seems like a complicated schedule, but really it's just a matter of, hey, get it in about half a week later. So if you made payments on a Wednesday, let's say every Wednesday or every Thursday or every Friday, you pay your employees, then that means by the Wednesday of the next week, you need to deposit. Same thing, then break the rest of the week up. If it's Saturday through Tuesday, then you make it by Friday. So in other words, it's only about 3-4 days. In addition, a semi-weekly depositor needs to document when payroll was cut. So there's an extra form Schedule B, and most of the software is always going to include this. What day was the payroll? Because what they're looking for there is on a month, let's say the payroll was here and here, the deposit then needs to be here and here. And if you end up being late, let's say a couple of days and deposit here, that Schedule B, where you document this is when payroll was done, is going to be used to calculate what your penalty would be for even being a couple of days late. Even 1 day late, if you're a semi-weekly depositor, can have a penalty. So be aware also that it's a common misunderstanding to kind of, well, I wouldn't say it's common misunderstanding. How would I say that? It's easy to just make a human error and forget which quarter you're in. So you're making an EFTPS deposit for first quarter to pay these on or before the 15th. But here you are in April and you're like, oh, this is the second quarter. So it's easy. I've seen this happen a lot just to, oh yeah, we're in second quarter. So I'm making my March deposit here on the 15th. And then when you go in online, you get to choose on EFTPS what quarter you're in and what quarter you make your deposit to. And you might make your deposit to second quarter, thinking, oh, it's April, I'm in second quarter. Well, but what you're paying for is the March. So realize that sometimes the pay period and the pay dates just are going to end up falling on a different quarter. And unfortunately, we as the IRS we don't read minds, but it's all electronic, which means that the computer it sits there. So if you intended to pay for March and it's paid for the second quarter, it's just going to sit on second quarter till you file your second quarter stuff. So it can cause you to have penalties, even just an easy mix up like that. A lot of employers don't qualify for this, but some of them do. And especially if you have a big profit one year and you're going to pay, let's say you make 150 grand a year for your business, successful business, but you're paying yourself, let's say about 50 grand during the year, right? You pay yourself a good salary. That's about 4,000 a month, about 12,500 a quarter. But then At the end of the year, you're like, wow, we did really well. I'm going to pay myself 100 grand plus my regular salary in the fourth quarter. This is going to trigger a next day deposit rule. And so this is where I've seen other companies as well fall into a problem where either they're a monthly depositor or a semi-weekly depositor, but then they make a huge deposit. That means, or a huge payroll, that means their deposit requirement goes the next day. Okay, so again, be aware of when your business increases payroll, make sure you're getting it right. Refer to Circular E. If you are an agricultural employer, use publication 51. Same idea.
Shareholder. Well, that's different than.
Yeah, so K1 is what you're talking. That's what we call that. It's comparable to like a W-2, but it is a shareholder payment. And those shareholder payments, yes, are done once a year. And that does not apply because it's not technically payroll. You're paying them, let's say, you got 5 owners, one of them owns half the business, so they get 50% of the profit on their K1, and then you, according to how much they own, split it up. But no, this does not apply to the profit share because it's not the difference that passes through the person who self-employment tax on that. So that's where that sometimes can be a little bit more in taxes that the individual pays than the business. Yeah. Late deposit penalties are on all of these simply because it's no longer the business's money. As soon as payroll hits, that means it's a commitment to the employee. So if you say, I'm going to pay you $100 and then they ask you to withhold, well, that's the employee's money. Then you have to do the employee's portion of the Social Security and Medicare. So all that money is the employee's money. It gets deposited to their account. It gets registered for their credits for Social Security. And that withholding is the money that is put aside for them to pay their taxes at the end of the year. So be aware that this is not their money. And a lot of employers, easy to forget that, right? Because although I'm paying you in theory $100 for that payment, I'm cutting the check for 75. And so where did that $25 go? We recommend to employers to have a separate bank account. Just set up a separate bank account. That's the payroll deposits. And then all the EFTPS comes out of that account. It's not required. The bigger your business is, it can keep it cleaner. But be aware that it's not that. And so because penalties are large, and it's an unnecessary expense, why bother? Why pay the IRS more than you need to? So, and I've seen businesses that really get way out of their depth. So if you feel like you're not really doing it, sometimes it is worth it to pay a third-party payroll provider. Keep in mind, business owners can be personally liable, even if you're an LLC, right? LLC, one of the reasons you set it up that way is to have a limited liability for the individuals. However, what we call trust funds that you're holding for the employee until you deposit it, you could be on the hook for it. They're called trust fund recovery penalties, and it's for the federal income tax, which is the withholding, the Social Security, and Medicare. If you don't withhold it or deposit it and pay it to the Treasury, you can have this penalty. And it's 100% of the trust fund. Business owes it. 84 that's going to give you information about that. It's a common misunderstanding of certain of businesses that, oh, well, I'll get around to paying that. There's a lot of things you can take time on and just pay interest, like credit card, right? Oh, credit card bill came, I can't pay it. I'm just going to wait it out and pay 1 month's interest. That's not allowed in cases of trust fund. Okay. EFTPS is the way that you make these payments. So sign up for EFTPS, you'll get a username and a password. You'll go in and be able to make your deposits. No charge for the service. You can set up and schedule payments. And if you need more info, publication 966. Also, EFTPS.gov has lots of info on how to use the system. You can, as an alternative though, if you're hiring a third party, have them make deposits on your behalf. And as you're aware, you're going to pay for that service. But the larger your business, the more it may be a savings, or think of it like insurance. You pay for insurance, but you don't always want to claim on insurance. You never want to have the problems that insurance is paying for. Same idea here. You have someone who is a professional, hopefully, right, that is responsible for it. They're in theory going to have more practice at it. It's their, responsibility. It doesn't mean that the owners are off the hook though. Be aware of that. You can't just transfer responsibility to them. So much like having an employee, if you're hiring somebody to do this for you, monitor what they're doing, right? And make sure that, hey, that deposit came out of the bank. A lot of employers will give the rights to debit from that payroll account to this third-party provider. So as an employer, just go in and make sure, yep, looks like the payroll deposit went through, great. Because if they don't make that payroll deposit, it still comes back to the employer being responsible for that. And you can try to build it into your contract with them, but quite often a lot of companies won't share the penalty with you. So you report the wages that you paid on the 941. And we talked about how you might also, if your business is big enough, add a Schedule B to that. So the due dates, April 30th, July 31st, October 31st, and January 31st. This is for when the filing deadline is. The deposit deadline, though, is earlier, right? We've seen how even for a monthly depositor, it's the middle of the month. So the deposits should all be in, but the payroll tax form is not due till April 30th. So here in April, you're filing that first quarter by the 30th of the month. So all the deposits must be in well ahead. Easy again then to make the mistake. Oh, that isn't due till April 30th. Whoops. If you paid it all at the end, you're going to get penalties for January, February, and March. If you do have it on a weekend, then do the next business day. One thing to be aware of is that penalties are based on the amount of money that wasn't in there. So as long as you're getting the EFTPS deposits right, there is processing time allowed for the 941. That's what the 10 additional calendar days means. So you might find that you threw it in the mail April 29th. We might not finish processing it till the middle of May. But as long as the deposits are made, you're in good shape. So the primary focus sometimes is, hey, make sure you get your deposits in on time. So again, going back to recommend the 941 rather than the 944 annual, the only ones that really seem to make sense is if, let's say it's seasonal. Let's say you just have a business that you do in the summer. Or maybe the other one, there are a couple of exceptions. Household or agricultural employers, the agricultural, we talked, they have an annual 943. But household employment actually can be done all with your 1040 tax. Think of folks like nannies or housekeepers or live-in nurse, things like that. They may be your employee, but you're not filing a 941. You're actually paying it all on your 1040 form, and there's a schedule for household employees. So just be aware of that. That's a little bit different if you're hiring somebody who works in your home. So top of the 941, it's going to ask for your business information, your EIN. We want to know the number of employees for the quarter. And so it doesn't have to be consistent, right? You may have, let's say maybe you had 5 employees here, somebody left, you had 4 employees here, you added 2 more, you have 6 employees here. You're actually going to go according to how many Social Security numbers you made payments to. So let's say it was 5, 4, and 6, you might still have 8 when you report here because there were different people involved, okay? So it wants the total number of employees and the gross wages, the total amount of wages. If there's tips, if there's fringe benefits that are taxable, other compensation that you give them, include all of that. Then show the amount of withholding. That's the income tax that the employee says, hey, please withhold this. Also, the total amount that's subject to Social Security, Medicare, and then additional Medicare. So most everyone's going to be Social Security and Medicare. Not everybody's going to have additional Medicare. Additional Medicare is for high wage earners. And so if you do have some high wage earning employees, they do pay additional Medicare taxes. And then have a record of your deposits. Make sure your deposits are coming in on time and according to schedule. Even if someone says, hey, I'm exempt, you're still going to include that on the 941. However, employee plans, like if you have a retirement plan or health insurance, those kinds of things are not included. So you don't tax yourself on these contributions. Wage base is the term that we use just to talk about those high wage earners. As soon as they reach a dollar amount, it changes every year. I forget exactly how much it is, but it's about 140,000 or more annually. That's when they reach a limit on Social Security. Actually, I think it's 160 now. I forget. Is it 170? Yeah, it keeps going up. So, but the point is that someone, especially someone who's on commission, if they have a really good year, you just might be on autopilot with withholding Social Security. So be aware when somebody reaches about that 170,000 level, you will stop withholding Social Security tax. But all wages are subject to Medicare tax. So no matter how high it is, they're going to have that Medicare. And then wages over a certain amount get that additional Medicare. It's kind of, on this page though, now we've got a second topic. So here's your second topic. I think this one's a pretty important one. Who can file the 941 for the business? Who is authorized to sign it? What you're signing when you sign that 941 form is you're declaring, and it's in government speak, under penalties of perjury, that this is, to the best of my knowledge, an accurate report. Well, only certain people are authorized to do that because only certain people can bind the company. Only certain people can make promises on behalf of that company. An employee can't make promises on behalf of the company. They don't own the company. So be aware, if you're a sole proprietor, business owner can sign the return. If you're a partner, any one of the partners or an officer can file. If you're incorporated as a corporation, either S Corp or C Corp, any of the officers can sign for a corporation. And then you can sign over with a power of attorney. It's an IRS form 2848, pretty simple form, really. It's a form that you file with the IRS. You sign it, authorizing your third-party payroll provider or your accountant, or sometimes you can even authorize an employee to sign on your behalf.
State, the corporation, if you're the spouse of the president, does that count?
I don't know. Let's say this, I would think if you're the spouse, you're probably an officer. So I would just go through the motions of Officially, I am the secretary, which is an office. So you got president, vice president, treasurer, secretary. And so that's all I would
And
say.
so I should use that kind of verbiage versus I've been putting office manager. Is that not a good? verbiage?
If you haven't been called on it, you're probably fine.
I've been doing it for years.
No, you're probably fine. And I'll say this, that the only time this really matters is when a mistake happens and we then go to try to find out who's responsible for not paying over trust funds. And so sometimes we'll just pull the tax returns. Who signed it? I need to speak with this person. There are plenty of times I would walk into a business and say, I need to speak with this person. Come to find out they're an employee. Well, if the employer is not paying it forward, then the question is, well, why didn't you pay it? Oh, the boss told me not to. So now who's responsible? Is it that employee who signed this return? No, it wouldn't be fair to hold them responsible because they were told, we don't have enough money, don't make the payroll deposit yet. Well, now you've got an employee in a compromising position because they're signing a legal document and they didn't have all the authority, because they can't just make that deposit without the boss saying, good to go, make that deposit, right? So again, this is, it only is going to come up in some rare situations that, whoops, that person should not have been, signing that. But however, you can give a power of attorney to them. And so that just means filling out the 2848 form.
Nonprofit structured like corporations, right?
Yes, nonprofits are structured like a corporation. There are, in a nonprofit, we don't necessarily call them owners, but responsible party. And it comes down to who can bind the company. And who is authorized to sign a contract. And usually it's officers. That's the name that you would put today. So penalty and interest. If you make late deposits, you're going to get charged penalties and interest. So it doesn't even have to be late. Let's say you just deposit less than what's needed. This sometimes happens too with businesses a lot, where it's easy kind of to get messed up on which month is which. And maybe you owed $1,500 here to be paid on the 15th. And then here you owed $1,600. It's no problem to get these mixed up, because if you pay $1,600 here, you're in a month ahead and it'll still count. But the other way around is not going to work if, let's say you had 18,000, or let's do it a different way. Well, let's do it like this. 1,600 is owed here, 1,500 is owed here. And if you get them mixed up and you do 1,500 here and 1,600 here, you're $100 short here. We'll charge you penalty and interest on that $100, which could end up being 150.
You kind of overpaid.
Yep.
And you have credit.
Yep.
And it asks you at the end of the ninth room, do you want to put this on your next return? Or
Yeah.
do you want to? If you decide to, oh yeah, I'll put it on my next return. How do you, like, would it not look like an underpayment if you took them up on that?
No, because you get credit for the date that the payment was made. So let's say it was an overpayment and you have $100 at the end that you just say, apply it to the next return. That $100, you actually get credit for it being deposited on this date, which is a month and a half sometimes earlier. So you're not going to have a late problem, but it's an accounting problem. So I don't always recommend that. If you have over deposited, I think it's just a clerical error. And it's hard a lot of times for a business to keep track of that overpayment.
Well, yeah, and that's what I was overpaid, and then I told it, oh yeah, I'll do a credit the next time, but then I felt really wrong not paying my full amount.
Oh,
So
yeah.
then I just end up with the same credit at the end of the next one, so I finally just said, just give me a check, because I'm like, I can't remember.
Yeah.
I feel very weird not paying my full amount.
For that matter, you want dollar amounts to match. You want it to be easy to figure out, right? So in a lot of cases, employers are not just paying $1,500. It'll be 15, 82, and 37 cents. And if you see the deposit for 15, 82, and 37 cents coming out of the bank account, you can go, yep, check, got it. Yeah. Again, penalty and interest are all charged on the underpayment. They're not charging the whole payment, but still it can get significant. For penalty and interest, if you want more info about it, notice 746. If you want to make a change, let's say you filed the payroll, but you had one extra payroll check that you forgot was paid, right? This happens especially if people pay certain employees monthly or other employees quarterly or biweekly, right? So some employees might get biweekly, some employees might be monthly. And if you make a mistake, you go, whoops, I forgot somebody's payroll. You can correct it. Form 941X is what's recommended. That's the form to use. A lot of times people will file a second 941, and that can cause confusion because IRS does not know. Was the first one right or was the second one right? Is this correct? Is this a mistake? Sometimes we'll process it incorrectly. So in theory, if we already have a 941 for quarter one, we should not process the next 941 that comes in, even though it may be saying it's for quarter one, on top of the old one. But that's a mistake of an IRS employee. But guess what? IRS employees make mistakes too. So if we get a second, well, we'll process it right over it sometimes. I've seen that happen. So know that you don't send in a second 941, just send in a 941X. If you're reducing the amount of payroll, let's say you over-reported and overpaid, you can apply the next quarter and request a refund like you said. But keep in mind, if you forgot somebody's payroll and you did not deposit accordingly, you'll get penalized. So the deposit really, again, that's your primary thing that'll keep you out of trouble. And filing a 941X, let's say you did, you cut the check, you scheduled the deposit, and then maybe you filled out the 941 wrong. Filing a 941X for a correction, if the deposit was already made, is not going to incur a penalty. So correct the mistakes as soon as you find out. We're going to recommend e-filing. We were talking before this started about how there are going to be some costs involved at e-filing. You will have to purchase software from IRS, and there's a list at our website of the approved providers. And most of them are doing it now by a subscription service, where every month you're going to pay a fee and to keep up your subscription. They also, many of them offer multiple levels of subscription. So some of them will have you just the base level, and then they'll add more services and more services, all the way up to hiring an authorized provider, where you just say, hey, I need you, ADP or Gusto or whoever, to do it all for me. So again, irs.gov and e-file employment tax is the page that you can look at. And you'll click through and see all the providers, and then you'll click through and see what they offer and what they charge. But you can still mail a paper return. And it sounds like a lot of people will do that. Many people do that. Even large businesses quite often will do that. When you outsource, the obligation is still the employer. The employer is the one who hired these people. The employer is the one who decided, I'm going to open a business and hire people. As soon as you do that, you have responsibilities. And so don't think that just because you hired someone that the burden falls on them. You have to double check their work. And so as an employer, you know, and I understand and sympathize sometimes because you might be the world's greatest plumber, but terrible at paperwork. And so that's why, well, I hired somebody, but they didn't do it. So be aware, you still need to do your own due diligence, just like you're doing today, educating yourself, so that you're aware of what they're doing. Hey, it looks like you didn't make the deposit. What happened? Oh, I forgot. That's all it takes to cost you money. The only exception to that is if you're hiring somebody, and you'll pay for that responsibility, a certified professional employer organization. That's companies just like I was talking about, like ADP and Gusto, these professional payroll companies, and there's a lot of them out there. Some of your CPAs may even qualify as a professional employer organization. Payroll service providers, any third party that you outsource to do this, again, can do multiple levels of things for you. And a lot of times they might help with all of your payroll functions. So it's not just filing the 941. They might cut the checks and direct deposit for you. They might do the EFTPS deposits as well. So they may just do all of it, pay the employees directly. There's different levels of service that they can provide. A lot of times it can be easier and make your business easier, but you will pay for that service. So as your business grows, it may be something that can help. A lot of times these employment companies too will also upload the W-2s at the end of the year. Maybe they will also upload your 1099s at the end of the year. So there are different levels of service that you can ask for here. Payroll service providers are one. You're going to hear a lot of different terms depending on what kind of a company they are. Others might be what they call reporting agents, professional employer organizations, or these certified professional employer organizations. And the certified is the that level that gives you the extra protection of they take on that liability. Now, EFTPS is mandatory for low dollar amount companies. You will, traditionally it was done just by sending in a check with the 941. But once that dollar amount gets higher, and it's pretty low now, I think it's about $2,500, that you'll get penalized for not making it electronically even. So be aware it is mandatory. It's easy to sign up and you will get your user name and password. So as soon as you sign up for it, it will allow you to review payments for the last year. It'll also allow you to schedule payments ahead. And you put an email address in there, just letting you know, hey, payment went through. Here's the number associated with the payment. We'll give you a big long string of digits saying that's your confirmation number. So because you're responsible as an employer, you want to follow up on it. And once you sign up for EFTPS, then you'll get those reminders and have your confirmation notices so that if there's ever a problem with a payment, you can call the IRS and say, hey, here's my confirmation number. Where'd that payment go? Okay, and the most typical things are putting it on the wrong quarter. That's the most typical error that people do. Also, a lot of your certified professional employer organizations are going to have their own EFTPS account. They will be making the payment for you. So they'll withdraw the payment from your account and make it using their own EFTPS. We recommend, even if you do hire someone like that, get your own EFTPS account so that you can respond as quickly as possible to any kind of mistake. You know, you find, oh, somebody miscommunication with the third-party payroll provider. One thing that happens, I've seen happen in the past, because it's a third party, they're not in the business, so they don't always know. And I've actually seen these third-party payroll providers go to withdraw from the company. And because of just how cash flow went that month, it might not go through. Non-sufficient funds, bank won't honor it. And it could be you're $100 short, right? You've got all the thousands for the payroll, except for that. Oh, I didn't expect that check to go through so fast. So be aware, if you're really close to the bone like that, your third-party payroll provider will attempt the payment, but it won't go through. And then it might not get made at all. So good communication is very important. And this is one of the reasons, hey, have your own EFTPS account. That way, if you see there's a problem with the third-party payroll provider, you can go in immediately and make that payment, especially if, whoops, there was a NSF, it didn't go through, bank didn't honor it. So recommend that you set it up for email. And once you do, you're going to get notifications about payments that you make, payments your payroll provider makes. You can designate a contact person. If you don't want it to be you, you can make it an employee. But it's one email address per taxpayer. So a lot of people might send it to a particular, payroll@mycompany.com. A change of address. If you do make a change of address, we're going to send a notification to the old address and to the new address, just so nobody can change the address on you. You can see when a payment was made. You can see payments that you've scheduled. Also, you're going to see when a payment was canceled, or you're going to see any return of payments. So when you sign up for EFTPS, it's going to send emails keeping you up to date on all of the status of it. We don't put links in the emails. So if you see something that seems to be from EFTPS, but it says, click through here for more information about the payment that didn't go through, know that is not from us. That is a scam we have seen in the past. So if you do get an email like that, hey, just check it out before you click. Go to your EFTPS account, log in, see if it's legit. And if you're tired of getting the emails, you can opt out. If we have a problem with payroll tax, it is one of the more serious things for the IRS to go out and chase down. Part of it's the fact that it's the employee's money. And keep in mind, if a company doesn't pay the payroll tax, like you're supposed to withhold for your employee. Employee said, hey, take out $10,000 this year to pay my taxes. And then when April comes and they file their tax return, if they get a refund and the employer didn't pay the payroll tax, we're still going to pay the employee, right? We're going to count it as if that money should have been there. We're not going to just say, oh, your employer didn't pay it, so you don't get your refund. That money's not there for you. That isn't how it works. The employer is responsible. So, we will hold them responsible for it. And employment tax basically it's a big deal for the IRS. And that's where we talked in the beginning about how even the individual owners can be responsible. Even if we track down and find out, let's say there are 3 partners in a business and one partner is supposed to be in charge of all the office stuff while the other 2 partners are responsible for all the field, right? Out doing the work. That doesn't mean though that one partner who is supposedly, we put them in charge of payroll, they're not the only one responsible. The other partners are also on the hook. Every single one of them is on the hook for the same amount. So especially if you work for somebody else, be aware of that. So here is kind of the overview of what we did today. We talked about make your deposits timely, file your return timely, don't pay penalties if you don't have to, and always be sure to know about your employment schedule. As I mentioned, most businesses probably are monthly, just because of the level of what most businesses earn and pay out as payroll. But as your business grows, you might grow into a semi-weekly. And that's that transition that can surprise people, especially if you were monthly, now semi-weekly, you will get penalties for being late. Because if you pay by the 15th, when you're supposed to pay by the next week, you've got about 2 weeks there, 2 weeks there, you're late. Okay. Also, sign up for your EFTPS and learn how to use that. And for more info, the handbook on it is the publication 15 or the circular E. Also, you can go to e-file payroll tax at irs.gov. Also look for depositing and reporting employment taxes. In addition, other ways is go to irs.gov/small biz and look under business structures. And if you're a sole proprietor and you click on that, it'll let you know the different forms and give you an overview of that. If you're an S corporation, it'll give you an overview of that as well. So you can see what forms do I need to file. An S corporation, it'll say, well, you're going to have the 1120S. That's your annual income. 941s quarterly and 1940 every year. And then W-2s and K-1s, right? So these are your reviews. And thanks a lot, folks. Thanks for having me here again. If you have questions or you have problems down the road, shoot me an email. Let me know, hey, this didn't work. We really want to hear feedback and find out how things aren't working. In fact, I'm taking back that feedback that you want a free e-file service for 941. There's a free e-file service for 1040s. Why haven't we gotten to 941? I'm putting that in my report.